Thank you for joining us today for today's webinar. During this session, we are going to cover the DNBi year in review and the product roadmap for 2021. And now I'd like to introduce myself and today's speakers. So I'll start with introducing myself. I'm Kendra Harding-Smith, Director of Integrated Marketing for Dun Bradstreet's Finance Solutions. And our first speaker today will be Lauren Clark Bakewell, Chief Product Officer for Finance and Risk Solutions. Lauren leads the product development and the implementation for all of our Dun Bradstreet Finance Solutions. Our next speaker will be Aaron Satwell, our Chief Technology Officer of Finance and Risk Solutions at Dun Bradstreet. And then to wrap it up, our third presenter will be Tim Bine, Leader of Product Management, responsible for driving the strategic direction, development, and the management of our Dun Bradstreet web products, our roadmaps, and our go-to-market. So to start, just a few things. Our presentation is scheduled to run for about 50 minutes. Also a few housekeeping items I want to go over, before we get started and into the official agenda and on. All the lines will remain muted throughout the duration of today's call until the close. The time permitting, we'll be hopefully able to answer questions at the end of the webinar, and please submit them via the Q&A box that you should see at the bottom of your screen. And then lastly, and we'll go over this again at the close of the presentation, we'll email you the recording of today's session, as well as provide you with a copy of the presentation. So please be on the lookout in your email inbox. A few days from now, you should be receiving that. If you don't see it, check your junk or your spam folder, because it may have landed there. So to go over today's agenda, we're going to cover first the current business landscape and what's driving the need for change, then how this landscape is driving our strategy at Dun Bradstreet in the context of credit to cash. Then we'll talk about the year in review and create the foundation for the fulfillment of our strategy, and then the product roadmap for 2021, and then close with a little bit about how we want to involve you in our innovation process. So now I'm going to turn over to Lauren Clark Bakewell to talk about the current landscape for finance and how this landscape is driving our product strategy. Lauren?
Great, thanks, Kendra. Welcome, everyone. I want to begin by also saying thank you for joining us, and specifically to giving us the opportunity to share what's been driving our changes and what you can expect going forward. Recently, a number of customers that I had the opportunity to talk to asked me specifically why we are changing something that works, something that you're all familiar with. Basically, why mess with something stable and that works? And I need to frame this conversation around that, why we're doing this, and it's important for you to understand that. We're going to talk about the changes we're making in context of the bigger industry drivers, in hopes that you agree with us and gives you a deeper understanding of the journey we're on and what's driving our efforts and the investments that we are making. We're hoping that many of you will ultimately, as Kendra said, participate with us more closely in helping us prioritize and focus on the things that matter most to you. There's lots of different ways we can take this. Again, we have some thoughts about the plans and the key things we're going to be focused on, but we definitely welcome your input. This year, we've invested heavily in DNBi, and really with a goal of significant product infrastructure and data enhancements. Although the goal was to make the platform improvements, so really focusing on the platform, seamless to you and all of our users, there were some of them that unfortunately were not as seamless as we had planned, and in fact, disrupted many of your normal workflows. Aaron is actually here today and with us specifically to talk about some important changes that we're making in our technical plant and the release processes as a team we'll be following moving forward. We've certainly learned a lot, and probably most around sustainable pace of change and making sure that we manage it completely and with you all in mind. We want you to know that whatever bigger picture, me and my team and the product strategy that we have, it all starts with literally delivering on the promise we made to you when you became a customer. So your experience with us in the product that you're using is very important, and we take it very seriously. And we're thinking about it a lot as we look at the roadmap going forward. Okay, with that, I'm going to move on to the landscape and what's specifically driving our need for change. As we look at the financial landscape, we know operational efficiencies are challenging organizations as they work to really look for that sustained growth and profitability. This year has been especially challenging, obviously, because of COVID, because many have, you guys, and I know we have pivoted to remote work. So although the challenges were certainly important before, and I wouldn't say that these trends have really changed, what we're really seeing is they've accelerated, and they're starting to really drive how we think about our roadmap. It's now more important than ever that finance departments are able to tackle some of these areas, specifically the ones that are impacting their environment, right? And specifically hurting their working capital, or maybe preventing a better customer experience, or ultimately not giving them optimal cash flow. Again, some of these areas have been enhanced by the COVID pandemic. According to a lot of the research firms, the following are the key challenges that really are incorporated into that operational inefficiency. And we're gonna hope that these resonate with you and ask you to help us understand if and how they are. So the first one, really multiple disparate systems. This is, if you think about it, this is really the swivel chair process. We know many customers have information about a customer or a business partner that's kept in different systems, which makes it hard to really have that single view or that connected view for creating consistent reporting or even making decisions. And it's also, realistically not efficient for the person working on them, having to move from system to system and keep track of that. Along those same lines, that labor-intensive tasks, looking for ways to leverage automation to make life easier and create a more consistent set of outcomes for the business. Certainly using predictive analytics to help know where to focus time and to spend time is an important move we're seeing. Compliance and governance gaps. When you have different systems or manual processes, you certainly open yourself up to gaps in the way policy is executed and managed. For some businesses, this is less important, but for many organizations, they're rethinking their governance and their compliance policies and systems and need some help figuring this out. And finally, the inefficient receivables management and collections. Again, this year, very challenging, and they can certainly impact cash flow. And during these times of stress, knowing who and how to manage those receivables and your loss forecasting is again, an important challenge that we want to address. Bottom line, the more your workforce, whether you're a company that has to stay distributed or are able to come back online, you need to streamline and automate internal processes. More likely you are to do that, the more likely you are to stay compliant, resilient, and boost revenue and profitability. The numbers are pretty clear on this. So although all of these things were in play before COVID, COVID has just really made this more acute and has required, I think, that all of us focus on these inefficiencies together. So before we move on to the next slide and talk about what we're doing specifically on this and how it's really coming out and manifesting itself in our roadmaps and what we've been working on, we're interested in hearing from you which one poses the greatest challenge for you or your organization. Your answer will be helpful in how we plan our next year. So please, if you have a point of view or even have a suspicion, please provide that insight to us. We'll give you a few minutes to respond. Should we have one of those dun 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 dun? Okay, it looks like we're stabilizing out here. Yeah? Okay. Okay. Looks like from what I can see, the most, again, it's spread out a little bit, but the inconsistent, varied reporting on data, that makes sense, is the biggest area of concern, with manual labor-intensive tasks and disparate systems as close seconds for those. I think that makes sense, and certainly the disparate systems plays into that that varied reporting data. So thank you for sharing that. That gives us some sense of areas that we might be able to help as we're moving forward. Okay, with those challenges in mind, let's take a look at our commitment and the focus that we've had for the DNBi product. We've been working on business intelligence by expanding our data coverage and insights and making sure they're available and actionable for you when you need it. For example, we created and then incorporated the COVID index and the recovery indexes to help you with your portfolio risk analysis. We certainly did this free of charge, and we're continuing to support those indexes to help you with your portfolio planning. We've also hit the 400 million businesses in our database, actually more than that, I think 420 or something, primarily focused on small businesses, which is really critical for managing risk in the current business environment, where we know those smaller businesses are disproportionately impacted. We enhanced our automated workflows and decisioning, as well as introduced some personalized analytic models to help you with some of those time to decision and optimizing resource issues. Our new credit to cash capabilities launched in April to combine critical data and technology to help connect disparate systems and ultimately increase cash flow by creating a standard view of what's happening in your collections environment. Ultimately, if we do all of the above, we should drive better customer experience and business outcomes. So those were some of the first things that we've done along these areas, and why we did them. They were looking to address some of these issues. Bottom line, we need to be able to help your organizations into the future. This is why we're making the changes and enhancements on the platform. Going forward, we do commit to doing a better job of communicating and engaging with you. This webinar, for instance, will be not just a one-time event. We're going to do this frequently in the year ahead, so you can keep up and offer us your assessment on the progress and any of the remaining challenges that we have, how to prioritize them. Next slide, please. In 2021, we're going to continue to work on streamlining our platform. We're not done, as well as incorporating the global data supply chain to deliver more value around data and analytics in one consistent experience. Having a single modern platform will definitely accelerate our ability to start to innovate on things you care about. Going into 2020, for instance, we had over 6 different platforms in this space, which spread kind of what we did in our data across different experiences. So we're really trying to pull that together so that we can innovate rapidly with one. Along those lines, we need to know more. We need a more flexible and intelligent product experience for you, right? The DNBi UI, although stable, is not flexible. We haven't been able to really adopt new business intelligence or integrate new workflows or compliance screening when and how you need it. And so part of our journey is changing the way the product experience works so that you have more flexibility. And finally, leveraging artificial intelligence in the platform. We have it, but we haven't really used it to help you discover businesses or portfolio risks that you otherwise might miss. So more predictive. We're providing greater accessibility to our predictive analytics. We're excited about all these areas and bringing new value to you in the time of this enormous business disruption. Although we know it's acute and it will stabilize over time, we know that having a trusted data and analytics partner will be more important than ever. And we want to continue to be that partner with you in managing your business risk. Now, I want to take a minute and invite Aaron Setlow, our CTO, to speak more specifically on some of the actions we're taking as we bring changes and improvements to the platform.
Hello, everyone. And thank you, Lauren, for the introduction. So I love the narrative around improving the journey and bringing the customer along. I think per my conversations with you directly over the last few months, there's been a kind of perception that we are foisting change. What can we do to improve that? Across technology platform and upgrades and release management and testing, there are a multitude of things, but before we dig into that, we really have to address the first and biggest complaint that we're hearing from our customers, which is stability and performance. And I wanted to provide a little bit of insight into what's happening. As Lauren alluded to, our core asset is experiencing unprecedented growth, our data cloud. We've gone from 320 million records in the beginning of the year to around 400 million. And this has exceeded our wildest expectations in terms of growth projection, but it's also one or almost 2 orders of magnitude more than our infrastructure was used to processing. And this surfaced multiple scalability issues, and we are laser focused on eliding every one of them. And how are we going to do that? In the DNBi plan, we've implemented and focused on a plan for instrumentation so we can identify the hotspots and surgically strike to eliminate them. And we hope this will coalesce into faster reporting. And this is something that we're delivering on now on a rolling basis and will continue to do as we roll out new features across the platform. So first and foremost, scalability and stability. We believe in concert with product improvements and the customer feedback that Lauren was addressing, we can make significant improvements to the platform. We've also implemented a stringent program to ensure that enough of our SMEs are reviewing the changes that are most critical to the system. All bugs are shallow with enough eyes. And I strongly believe that that is already providing gains. When it comes to release management and product development, this is where I think the secret sauce will come in for the new engagement model we have for our customers. From things like friends and family staging environments, where we can selectively provide a set of changes and allow customers to give us the feedback before we roll them out on a wider basis. I think this will have material impact on the quality of our product. It also favors smaller incremental releases that will be less disruptive to our customers. And we believe that we can segment these changes in a way that will provide value and again, minimize disruption. And this is a process improvement, and this is something that is bi-directional. It's symbiotic, and we're really looking forward to your feedback here. And I think this is just the beginning. We've had a concerted effort to bring a lot of our edge computing to the cloud. We're continuing to do so, but we need to do so in a way where we can spin up kind of systems in a box so that we can do this A/B testing or canary environments or testing new features in a way that is going to be agile, fast, and again, non-disruptive to your workflow. So we believe in a concerted investment and collaboration across product development, technology, and customer liaison to materially improve the journey. And with that, I'll hand it back to you, Lauren.
Great, thank you, Aaron. And again, Aaron and his team have been fantastic partners for us, and we all recognize that these changes are going to be material for us, for you, and again, are excited to be working more closely together. And I know a number of you have volunteered to be part of that process, and we are definitely going to be taking you up on it and look forward to working closely with you. So let's talk about our vision. Our vision is really, so where are we really headed with this, is to deliver a complete and integrated credit to cash solution to proactively mitigate risk and improve cash flow. So continue to do the mitigate risk, really kind of taking on that notion of improved cash flow is what this is about. The other thing another key word in there that I want you to hear is integrated, right? Where today we have DNBi as a platform that you come to and you can use, we also do have APIs and integration capabilities, and we want to make sure to make those easier for you to consume. So again, if we think about those siloed experiences that you have in your finance department, how can we help you bridge the gap there, where we're taking the information, the analytics, some of the customer information that we have, and putting it in the systems that you need it in, and working with you on that. So when we look at this, where do we start? We start with delivering on those business records. as Aaron was mentioning, you know, that isn't a journey that's ever done for us. We are constantly looking at the business records that we have, whether the number is 400 million or the number is 450 or 350, it's a lot. And it's not just the business records themselves. Again, using the DUNS number, you all know that capability of using the DUNS number to really ground on the business, but then tacking on the insights and the analytics that are associated with them. So important for us. So it's a combination of continuing to deliver the breadth, but also the depth, right? As industry leader in trade credit intelligence, we will continue to enhance our solution in the key areas of credit onboarding, automated decisioning, again, that integrated decisioning, portfolio risk management, not just company risk management, but portfolio risk management. And also, while we're doing that, really expand across the bridge from credit to cash applications. There's no question that the world of finance risk continues to evolve and to require innovative digital solutions. We're committed to being on that journey with you. Okay, now I want to invite Tim Bine, Global Product Leader, to talk about DNBi 2020, a year in review. More specifically, he'll highlight the enhancements to the content analytics and functionality that you've seen this year, as well as share the roadmap building blocks that we're planning for 2021. Tim?
Thanks, Lauren. Thanks for the introduction. So, hello, everyone. I'm going to talk you through, as Lauren said, a 2020 year in review for DNBi. And then as we look forward into 2021, what our strategic plans are, how we expect them to come to life through the DNBi product. So next slide, please. So look at this from left to right. I would say credit risk management is what we're best known for, particularly for the majority of today's audience, helping you make informed credit decisions on new prospects and manage risk across your existing customer base. As we think about the building blocks for that, data, content, it's at the heart of the machine, connecting and consolidating all the available information that we have and you have on your prospects and customers to provide a comprehensive picture of each of your customers. As we go across, we bring that data to life with predictive analytics, scores, ratings, credit limits, risk levels to inform your credit policies and enable you to make efficient, effective decisions. We strive to provide you with an enjoyable user experience as we do that. Easy to navigate software, quick to understand, clean and clear. Obviously, as both Aaron and Lauren have talked through, there have been some service disruptions to that as we've evolved the product in 2020. And I want to reinforce that we're so focused on making sure that ongoing, the experience is seamless and a pleasure. And then lastly, but not least, ensuring the necessary security controls for both of our organizations when it comes to handling data, and particularly sensitive data related to that. But then as we think across the end-to-end, although credit risk has always been at the core of DNB, and that really hasn't changed, these same building blocks, data analytics, UX, and security, enable us to extend our proposition from trade credit to cash, moving from just assessing the risk from a credit perspective of taking on board customers, managing credit exposure with customers, but then feeding into the end-to-end accounts receivables workflow that ultimately these customers end up owing you money before they're paying you that money, and then it goes through a collections and payments and cash application process. And we really see these foundations being the critical foundations to enable that credit to cash proposition. And that really does reflect what we see in the marketplace, talking to you, talking to your colleagues, and talking to other peers in the industry, that bringing together of credit management and revenue management together is increasingly happening. Next slide, please. And the specific 2020 DNBi product enhancements we frame in those three areas, data, content, analytics, and user experience. From the content side, deeper US content. We've brought in US public record data, providing detailed specifics on information filed at US state registry level. We've brought in US federal information from government tenders and contracts, federal loans and guarantees. We've also expanded the globality of the content, public company financials, including annual and interim statements globally, local registration number searches, so you can identify international businesses using a unique ID. And coming next week, we're bringing in restricted party screening into DNBi as we start to look across both financial and regulatory risk. And you'll have seen some in product messaging around that over the last few weeks. So you can screen your customers and the principals behind those customers against OFAC lists and hundreds of other similar global lists. From an analytics perspective, we touched on the COVID folders, and there was a question around those. We've brought in the COVID folders across 4 different categories in your customer base, and those are updated every week. So you can rest assured that we're tracking your customers as they change and perform over time. We've brought in consistent naming of our scores, failure scores, delinquency scores, to replace FSS and CCS historically across the globe, as well as bringing in a new maximum credit recommendation for US and Canadian records. We've brought in an overall business risk, sitting on top of all the individual supporting elements that you saw before, so to provide that overall single view of the company risk. And we've also brought in consistent global risk levels, taking the US and Canadian risk classes and expanding that concept globally. We've from a user experience perspective, we've redesigned the credit reports in US and Canada and some of our larger European markets, and we've added a consistent summary chapter across all the countries that a number of you who have international businesses have responded very well to for usability of the content. We've reduced the size of the report PDF. We know many of you save and print the PDF. And we've tried to remove a lot of the unnecessary white space that you saw before. And also brought in an interactive family tree within the credit report so you can understand corporate exposure across your customers. And we've introduced a new guided learning capability, the ampersand that some of you will have noticed at the bottom right of the screen, for short video guides and walkthroughs to help you and your teams get the most from DNBi. And then underpinning all of that from a security perspective, bringing in tighter controls around user credentials, user IDs and passwords, and session duration, so that you can be confident that the access you have to the product is underpinned by the most modern levels of security that we hold that technology to. And as we look forward through the rest of 2020 and going into 2021, as Aaron and Lauren reinforced, we know that a seamless adoption of these capabilities is critical. And it's an absolute top priority for us to ensure that all future development and changes to DNBi do not disrupt your business processes. So could I ask to move to the next slide? And then as we look forward to 2021, and from a content, analytics, and user experience perspective again, building the vision of what's coming. And really how I want to frame this is moving from a world of traditional trade credit to a world of integrated end-to-end credit to cash. We're looking at some of the same themes across data analytics and user experience, continuing to build out globality, consistency, analytics that can really help you to tune the product to your personal credit and risk management policies, and delivering it in such a way that it feels like a connected end-to-end experience. To touch a little bit more one by one, on the content side, we will continue to expand global coverage across the product. You'll have seen some of the improvements I talked about before for 2020 when it comes to credit reports. From a monitoring perspective, from a portfolio management perspective, we are bringing in global content. So you'll be able to monitor changes in any company around the world, not just North America. The same for portfolio dashboards, so you can drill down and understand your true global exposure, not just the exposure you have in North America. And that's underpinning also our automated decisioning and account management capabilities, really dialing that up so that you would enjoy the same capabilities regardless of where your customers are actually based. Many of these capabilities today are specific to US and Canadian companies. From an analytics perspective, if 2020 was about focusing on enhancing and expanding the standard analytics we offer, such as the failure score, delinquency score, credit limits, overall business risk, risk levels, so that our standard proposition meets the needs of the market, 2021 is focused on personalization. So we're already working with a number of clients where we're analyzing your customer base, your accounts receivables profile, and determining the right credit policy to set up to manage risk going forward based on actual factual data. And we're working on a personalized analytics capability that we can tune that and scale that so that you can take our scores, your own credit policies, and actually tune it based on the risk profile that your business is tolerant to, but also ensuring that you bring in external information when it comes to powering that going forward. So we really do then apply the right types of limits, the right type of risk policies as we go across the board from credit into credit to cash. And then from a user experience perspective, we are connecting together what we're calling credit intelligence from Laura's previous slide with receivables intelligence, and connecting those two things together across a connected end-to-end credit to cash workflow. Think customer onboarding all the way through to cash application and money being booked in the bank. The credit risk assessment of new and existing customers remains critical in itself, but is also the upstream process that informs effective collections, payments processing, cash application. And all of that with the foundational security around the different capabilities we're launching, the systems that we're using, the combination of your data and our data to make sure that you can trust and rely on the security that underpins the product that your companies are using. We're really excited about the road ahead for credit to cash, the continued role we can help in the continued role we can play in helping you both effectively manage credit risk, but additionally powering your receivables management processes as credit risk and revenue management and receivables management become one. We're now going to run another quick poll for you to respond to. Kendra, if you could pull that up on screen. And please just take a few seconds to think through these options and make your choice. Interesting to see. So again, there was no clear far out winner, but what I would do is to couple together workflow automation and AI-driven analytics and decisioning. Automation is enabled through effective application of credit policies, risk management policies in an effective automated fashion, which is enabled by scores, decisioning, rule sets. So I think combining those two pieces together, we've almost got 50% of the audience that are looking at how to move to a more automated fashion where analytics and decisioning, be they traditional analytics or artificial intelligence driven analytics, is the power that informs their decision making going forward. I think that's a very interesting conclusion, and actually helps to reinforce the next levels that we want to make from an analytics proposition perspective, as well as from an end-to-end workflow automation perspective, tying back to the previous survey around reducing manual tasks and moving from a manual labor world into much more of a systematic, efficient, automated world. So thank you very much for sharing that. With that, I'm going to hand back to Lauren, who's going to take us on from here. Lauren, over to you.
Great, thanks, Tim. Do we have the, moving on here. To close out, I do want to talk about how we'd like your input and your input specifically to help us drive and prioritize the next steps. Those two surveys, believe it or not, are going to be very helpful to us. But kind of as Bill Gates says, kind of a little bit of apple pie here, but software innovation, like any innovation, really requires that we have customer feedback and understand your needs. And again, we have good discussions with many of you, but we need to have a more broad engagement. And so along those lines, we're committed to doing some things, either new things or things better than we've done historically, to help you be part of the engagement process and the innovation process. Again, you don't have to do this, but we'd like to encourage you to become part of this because it will ultimately make sure that your voice is heard as we're thinking about these things. So we're going to have these a number of different customer panels. So sign up to be part of them. Depending on the one that most interesting to you, ultimately we're going to, we can't have one big panel with all of our customers. We have nearly 20,000 customers. So really kind of putting it into different bite-sized pieces and areas of interest to help guide our roadmap. We're going to be doing a lot more in-product surveys. Again, this is always a balance. We don't want to spam you. We don't want to irritate you. But we do need to hear from you. And this is an easy way to do it. And so you're going to see some more of those. Again, if they start to be annoying and are not helping you, let us know. Again, we're gonna take it easy, but we have some new capabilities in the product that are gonna help us with this so that we can do it in a contextual way. And as we're able to understand your needs in context of how you're using the product, it can help us with that roadmap. Again, really important for us. And then finally, as Aaron brought up, really putting in place a testing program for those of you who are interested in participating in this. Again, not for everyone, but certainly for many of you, you've indicated an interest in doing this, and we want very much to engage with you on this and make sure that we're working closely together about that. And I think there's even a question on this that perhaps Aaron can speak to more specifically. The other thing in this area that we're doing this year that we haven't done before is really engaging with early adopter programs. And we have one that we're working right now on our risk analytics platform, which is really around that supplier intelligence use case. And we're going to be rolling out a product for supplier intelligence and compliance space, and kind of going through a rigorous early adopter program with you guys. It's not about bug fixing. In this case, it's not really testing. We believe we have a fully baked product, but really looking for you to look at it and say, yeah, this actually solves what I would want to solve in this area, so that it can, again, help us with those roadmaps and getting it right for you moving forward. Okay. Kendra, would you like to take it?
Yeah, thank you. Thank you very much, Lauren. So this closes out the presentation part of the webinar, and I want to thank you all for joining us today. As noted at the beginning of the webinar, we do have or have been recording the session. So again, please look in your email box over the next few days. You'll get a copy of today's recording as well as a copy of the presentation slides. And included in that email, as Lauren was just talking to you all about, there will be a way to sign up to be part of our customer panels to help inform and guide our product roadmap. So I think at this point in time, what we'd like to do is, there were a number of questions submitted during the course of the webinar. So we'd like to start to handle those live. Tim, Lauren, Aaron, what I will do is I'll try to field to the right person as I pose out the questions. But if one of you thinks you should have gotten the question, of course, by all means, jump in. So the first question in the queue is, we were told that the COVID data was a point of time, in time snapshot only. Is that data going to be updated since this is an ongoing pandemic? And is it already being updated? Actually, the questioner asked if it was being updated daily. So I think, Tim, that may be a question for you.
Yep, I'll take that. Thanks, Kendra. So initially,
Sure.
when we put in the COVID folders into DNBi, I think that was back in very early April. We put them as a one-off, but then we instigated a process where the population of the records in those folders was moved to a weekly updated process, and that's been in place since, I think, the back end of April. So since then, we screen all of the DUNS numbers that each of our customers has across their folders, and we screen them against the 4 COVID categories that you see in the folder structure within DNBi today. And we make sure that only the businesses that are up to date in those categories are there on a weekly basis. So we're already doing that process on a weekly basis and have been doing so since the end of April.
Great, thank you. Okay, there was a question regarding the collaborative testing. So Aaron, I think this is directed at you, and it is, what is the plan for collaborative testing? We don't want tests in our production instance. Will there be a sandbox instance available for collaborative testing? So if you could just, I think, go through what the process or processes might be.
Yes. So currently the process is to reach out to customer service, client engagement, or customer engagement manager. And if you work with us, we can spin up a staging environment. This is pretty manual. It's less than ideal, but it's something that's tenable and we can do on a case-by-case basis. We're somewhat rate limited by capacity to do this, both from an infrastructure and personnel perspective. As we move forward, and again, as we adopt cloud-native, cloud-capable technologies to kind of spin up environments in a box, we see this as becoming something that will be much easier and if we track to this in a way, if I'm talking about moonshot environments, it's something that we could even self-service at some point. But the practical answer is, please reach out to us. We can work with you. And it really is on a case-by-case basis.
Great, thank you. Okay. Okay, there's a question here regarding the 400 million records in DNB. Is that in the worldwide database? And the answer to that question is yes. The Dun Bradstreet just hit the 400 million business records, and it is from around the globe. So it is in our data cloud, and it is worldwide. So the answer to that question. I think, Tim, this is directed at you. Will add to portfolio ever be automated? As of now, we have to choose to add to our portfolio. And when we pull a report, can it be added to our portfolio?
Very good question. It's something we debate over quite often on this. On one side, it improves the efficiency of the tool if every report that you order or decision you make automatically gets added into your folders so you can track going forward. That works very well when it's customers that you're deciding to do business with. What we've heard on the flip side of that is if customers are assessing the risk of businesses and decide not to take them on as customers and never want to touch them again, we don't want to assume that those records automatically become tracked and are meaningful going forward. So what we're debating at the moment is, can we add that as a preference, that different users, depending on whether they always want to or only sometimes want to, add records into their portfolio. So that's how we think we're going to tackle that. And as we come to conclusion on that, we'll obviously communicate it through in advance of making any changes. But as it stands right now, we want to put the decision in the hands of the user to determine, is it a business that is meaningful going forward, rather than just assuming that it is, and adding in, kind of, let's call them non-customers into your portfolio to sit alongside your actual customers.
Okay. Is there a plan to create a credit limit date field in the account manager? There is currently no date field to import into our ERP, and so due to this, every credit limit change requires a manual touch to maintain effective dated records in our ERP. I think, Tim, that may be a question for you.
I will take that. I don't have a clear answer for today, but it's a very good question. One of the things that we're doing in 2021 is to kind of lift up the covers of both account manager and decision maker, and kind of expand and enhance that functionality, because also when we think through account manager feeding into the receivables management process, they both rely on accounts receivables data. And that will be the opportunity to look at kind of this from an audit trail perspective, which is how I understand this question, knowing if a credit limit has changed or when it's changed, to mean the transfer of data from the product into the ERP is an automated or seamless way. So we don't have a plan to add that field in right now. I can't give you a date, but I think as part of our account manager assessment going into 2021, we will add this specific capability to the list that we assess.
Okay, great. Thanks, Tim. The next question is, can we get advance notice of what is included in each release, even the small fix releases? Often we get impacted by the changes into DNBi, but they've been unannounced.
Maybe I'll take that too, Kendra. We're on a little bit of a journey on this one, and we've moved from what you'll have seen as a kind of an interrupt page within the product where we communicate release notes about releases to providing a slightly more interactive view prior to each release. What we do is we bring in the release notes 2 weeks before each release goes live. And that's within the ampersand at the bottom right of the screen that you see as an ever-present icon as you work through DNBi. So next time you log in, take a look at the ampersand on the bottom right. It's always there. If you click on it, one of the options you'll see is release notes, and you'll see that for historical releases as well as 2 weeks before each new release goes live. And that's the best place for you to go to find out what we're bringing in, what we have brought in, and make sure that you're aware of the changes that matter to your business. Sorry, Kendra, if you were going to answer that, but hopefully I've done it justice.
Nope. So yeah, I think you've done it justice for sure. The next question is also related to enhancements. Is there a better avenue to suggest enhancements? This client has been entering cases into DNBi support queue. Ultimately, they get closed. They're considered an enhancement. Once closed, there's no avenue to get information on the status of the enhancement request. Will there be any kind of forum suggesting enhancements to product? I think, Lauren, this might be you, or it's you and Tim.
I can start for sure, Kendra. It's Tim here.
Yeah.
And maybe if Lauren wants to complement, that's great. So I think first and foremost, from an individual perspective, either the DNBi support queue or get in touch with your dedicated account manager from DNB, who will be kind of best placed to pick that up on a case-by-case basis. As Lauren talked through earlier, what we're looking to do is to significantly ramp up the kind of innovation interaction that we have between yourselves and DNB when it comes to roadmap planning, enhancements, future enhancements that matter to you, more of these types of sessions. And I think there will be a more formal approach taken. I don't know if we've exactly landed on the right mechanics yet, but in the interim, definitely through your dedicated account manager or through the support queue that you're raising, because my product team do look at all of the queries that come through the support queue and make sure that they're assessed as we go through the planning for the future releases. Lauren, I don't know if you want to expand on that at all.
I do, and sorry, I was muted, so apologize. Rookie problem. So yeah, I think, you know, there's a commitment here that you've had a bit of a black hole, and we get that. And we're, as Tim said, we actually have been paying attention, but we don't circle back around and give you the feedback you need to know in terms of yes, no, why, you know, and really have a conversation with you about it and engage with you. So yes, do use those mechanisms today. Going forward, as Tim said, we have a new capability in product that we're working on to create the right experience for you so that you can make it self-serve and not have to necessarily join webinars and join these product panels. But we're going to do it all in parallel, right? So we're going to continue to offer and these sort of webinars and panels, as well as work on in-product experience places where you can provide feedback to us and get, you know, responses from us. So it's a commitment. We don't have it 100% nailed yet.
Okay, thank you, Lauren. Thank you, Tim. So there are two more questions here that are, I believe, related. I guess I'll ask them one at a time. Regarding family tree details, if how are the corporate linkage details being updated? And I guess I'll ask actually the second question too, Tim. Does the family tree replace the subsidiary list? This client has noticed that in some of their reports, the subsidiary list is no longer there, it's missing.
Yeah, let me tackle those two together because I'll expand on the update we brought into the product earlier this year. So we brought in a new interactive family tree section that you'll see on the left-hand side as you pull a credit report. And that goes into the DNB family tree that we hold on the entity you're looking at and shows you where in the tree that business sits. It's root to the top, so the ownership structure ahead of it up to the global ultimate family owner. And then also if you need to drill down into any of the other family members, it takes you through to the option of choosing to order a credit report or pull a decision on connected family members. So it's really bringing an interactive ownership view versus a static list of subsidiaries or parents in the report. So yes, the second question, the family tree is where we now recommend you go to understand ownership structure up and down within the family tree, rather than a kind of a static first 10, first 20, first 40 subsidiaries or branches that you see within the downward ownership of the business you're looking at. The same information is coming from the same place, it's the same data, it goes through the same process and data validation at our end. But we would encourage you to use the corporate linkage family tree section within the report going forward. And That data is updated as we find out about majority shareholder ownership changes within a business. And we then reflect that in our database, and then our family trees get connected together from kind of legal ownership perspective, and that results in the family tree that we present to you within the report. So hopefully that's answered 2 questions in one.
Terrific. Thank you. So this next question, Tim, are there any plans to implement a multi-layered approval process for credit limit changes? I don't know if you wanted me to read the rest of the question or if so let me finish it up actually. So when a limit reaches a certain threshold, we have to manually route the limit change to multiple people. You know, for example, the first level to senior director, second level to regional financial officer, and so on. So again, are there any plans to implement a multi-layered approval process for credit limit changes?
Yes, so it's part of what we're looking at for our kind of automated decisioning scorecard kind of functionality for next year. And I'm not quite sure if this question relates to a customer using Decision Maker today or Account Manager today or using the DNBi core product today. Maybe we can follow up separately to understand the specifics. Looking at our more automated scorecard-based capabilities within both Decision Maker and Account Manager, one of the things that we know has been somewhat restrictive is a limited number of predefined escalation routes. And one of the things that we are looking at for 21 is make that configurable so you can route it to as many upward levels or lateral levels as you wish. So if you want to roll it up to first level, second level, third level, depending on the significance of a change, and credit limit changes would be one of those variables that would be applied through there. It could be risk level changes. It could be a number of other elements that you have in your credit management workflow. That's one of the things we're looking to significantly open up and increase the flexibility of, so you can determine exactly what the escalation mechanism is, what the roles are that you would escalate to, and the number of levels in the hierarchy that you want to take it to. Hopefully that answers the question, but we can follow up specifically because it may be related to how to handle credit limit changes within the credit reports themselves rather than the automated decisioning tools that we offer. We can circle back to make sure we've got that covered.
Okay, thanks, Tim. I'm going to field one more question because I think some of the other questions are very specific, and we will forward them on to the team to get back to you if you have in fact submitted a question. So this very last question, Tim, I'm certain is directed at you, and it has to do with the actual, I'll say, presentation of the reports themselves. So in an effort to utilize more white space on the reports, I found that the font size of the report makes it difficult to read. Will there be the capability to customize the fonts for an easier read?
Good question. So this is a constant debate for us with ourselves and also with our customers and our users. Because some of our users insist on using the information purely on the page within the app. Some are saving it and printing it. Some are saving it and printing it in color, some in black and white, some saving the credit report or other views in a PDF rather than printing. And we're trying to cater for all of those different needs. And I think what we've definitely learned as we've gone through 19 and 2020 is something that looks very, very clean on a website, on a page, might not print as clearly as that, particularly if you're printing in black and white. Light gray on dark gray, which might on the screen look like red on black, doesn't look as good on a black and white print. So we are always trying to improve the visibility of content within the reports, whether this stretches to customizing the font size. What we're looking at is a whole number of different things, which might include font increase, it might include color backgrounds, but making sure that those 3 or 4 mechanisms that we know users rely on to look at data that's presented on the screen, online and offline, that we deliver it in a way that's highly visible, highly readable, regardless of the mechanism used. So that might stretch to font customization, it may not, but above all, we're committed to make sure that it's not difficult to read the content that we're presenting.
Terrific. Thanks so much. So as I had noted before this last question, that will be the last question for today. Again, we do want to thank you so very much for dedicating this hour for us and we will be following up with the recording of the session as well as a copy of the presentation coming in your email. And as Lauren noted, this is only, the first of many updates that we will continue to provide you as you join us, and we join together, I should say, actually on the journey for the credit to cash solution that Tim, Lauren, and Aaron have laid out for you today. So thank you very much and have a great afternoon.
Thanks, everyone.